this can't be overstated, this change that we're seeing in the industry, because of its effects. I want to talk about it because I've seen this before. This is deja vu. These times are massive transfers of wealth. That wealth creation is life-changing. This shift is when buyers and people with money and savvy investors go, it's time. And you have to remember, by the time that everything goes back to normal, if you wait too long, those deals don't exist anymore. Welcome everybody to Self-Storage Income. And today me and Connor are both back. We're back in the office. We had a long week at the conference, which we'll talk about because that has to do with the subject today. And that is that it's changed. The last 60 days, we've seen a huge change within self-storage, deals, capital, what we're seeing on the market, conversations we're having with brokers. It has been a really big change in the last 60 days, and it's exciting.
It really is exciting, and I can't wait to dive into that and really have you just share with everybody what exactly that you're seeing with capital, with deals, because so much of that has been so hard over the last couple of years for everybody. And really excited to dive into that. But first things first, the conference.
Yeah.
What were your biggest takeaways? What did you enjoy the most? Some of the most impactful things that you saw, heard?
For me, the most impactful thing always is, and I talked about this at the conference, we are so lucky and blessed to have such a large listener base here, all of you. And the fact that, all these people have been listening for years now and literally kind of coming along with us on that journey. And so for me, just to be in the room with everybody and hear about their stories, their success. I mean, everybody that's listening to this podcast, especially people that are new, it'd blow your mind how many people have gotten into self-storage through listening to this podcast, through the books, just YouTube videos, just free material, right? And that's not including all of our groups that we have, which people are buying deals every day. At the conference, 2 people in our masterminds got deals under contract and bought a deal at the conference.
Site, man.
To me, that is so awesome. Impactful, so meaningful. I love that.
Yeah.
Not to mention the feedback. Mm-hmm. It's different than just absorbing content, right? The feedback you're hearing, everybody on the ground with the professionals, the brokers, the third-party vendors, because that means a lot. When you're talking to developers, when you're talking to the tech people, to hear, are people signing up? Are people building? What are they doing? That gives you a good feel of the market as well. And so to get all of that feedback all at the same time in real time, it's a very dynamic type learning process. Mm-hmm. And it gets you a really good feel for what's going on, especially because, at our event, we don't sell. So it's no, we're not doing pitches. We're not doing that. It's a very high-end conference. It's really, really nice, as those that follow me on social media things probably had seen. I mean, we're talking dinners, everything's all included. So it's a lot more intimate atmosphere. We're with each other, right? Everybody's there with me. I'm talking to everybody and you and everybody else. We're all together. It's not like a normal conference. That allows there to be a great environment for not just networking, right? But understanding, because everybody's open. Mm-hmm. And everybody, and that's how we started the conference out. All right, everybody, we're here. This is more like a mastermind than a conference, but, be open, talk to your neighbor, share what's working, what's not. That's why we're all here. And I was start out by, that's what we're doing. Mm-hmm. We're doing it on the podcast. So that means we're sharing our data, which we did. We went and presented and share all our information. We want you to do that too, because that's what makes the experience great. That's what I liked about it. How about you?
Yeah, man. No, I thought it was just fantastic. I mean, year after year, it's just an amazing event. And like you said, the impact is huge. We often, I mean, especially me, don't really understand the impact that we're having at such a large scale with so many people until we get to that event or others. And, we're talking to these people that are...
Me too. We forget it.
Oh, man. It's so easy. It. Yeah, we're sitting in this room, just me and you hanging out, got some cameras and mics.
Exactly.
And we're doing this thing. But this is literally helping people quit their 9-to-5s that they don't want to work anymore, help their families in certain ways. There's people that moved from other countries to the United States to start doing this because of what we're doing to survive, to literally survive. I talked to a few people it was just amazing what their story was. And The other thing, though, a huge takeaway too, Jason, if you're listening out there, plug here, but I was talking to one of the attendees and he had actually gone out and he'd been listening to the podcast for a long time, was really interested in storage, has been trying to find a deal, and he ended up getting this car wash come across his table. And he went out, ended up buying this car wash. He's looking at buying more. He's looking at buying some gyms. And he came up to me. He's like, man, I just want you guys to know, like everything that you guys talk about on the podcast, I'm pulling the same exact levers with all these other business concepts.
Yeah.
And it works everywhere.
Yeah, absolutely.
It's all the same levers. It's all the same fundamentals.
Absolutely.
It's like, dude, you are exactly right.
Wait, when we say self-storage is a business, that's how we treat it, view it, and teach it on the podcast.
Yep.
And two, I do this with other businesses.
Exactly.
The same thing. I'm buying. We bought like our recent acquisitions of product-based business and the hunting industry. It was literally the exact same thing that we were doing. They rolled it in. We did all the same things we would do to buy a storage facility, basically. Obviously, there's difference between title and yes, but the application of finding value, right? Its lack of performance and then executing on that business plan, it's the same.
It is, man. So it was just awesome to hear. Obviously, we know these things, but seeing other people seeing that and understanding it and actually using it in real time, just totally incredible to see. And again, like you'd mentioned, that connectivity and that intimacy that you have with everybody where you're sitting down at breakfast with any random person. We've got all these tables out there. You're sitting down at dinner. You're going on the boat rides. You're doing all these different things, going on the facility tours. All of that is just a massive, massive opportunity to build the network that you need to be able to execute, whether that's finding deals, finding capital, finding partners. It's the place to be for all of that. And it's just, it's like networking on steroids, essentially. It's like a LinkedIn steroids, where you're just hanging out, getting things done, putting pieces together. So those are some of the biggest takeaways. Super grateful for everybody that came and joined us. And it was just awesome to see so many of those people there.
And it showed the difference, though, in the market and what's happening.
Yeah.
That was this year's conference compared to last year's, totally different.
It was, yeah. The
vibe was different. And there was one big thing that I took away. There was way more excitement amongst people that had just gotten in the industry or were getting into the industry than existing operators. And I saw that especially to the fact that the demographic and who we pulled in, we did not have a good representation from a lot of big operators this year. And last year, a lot of the big operators were a little down and negative, which they should have been. We were, right? Because it's true. That's what was going on. So last year, it was a lot more about like, hey, here's where things are going. This year, it was different. And I think that really showed to the fact in the last 60 days, especially during the conference, some of the things that have changed. This can't be overstated, this change that we're seeing in the industry because of its effects. And I want to talk about it because I've seen this before. This is deja vu to going back a decade ago or however long ago, after the last recession. And I see it in all aspects. We see it in the vendors. I see it in the owners. We see it in the investors. We see it in the operators. And we went through this last 2 years, which were rough because the housing market slowed down, occupancy dropped, rates dropped, right? And the interest rates went up, so acquisitions fell off a cliff. Because DCR, debt coverage ratio, went up. So a lot of people were having a hard time penciling deals with debt. The sellers and the buyers were 30, 40% off. And so it just stalled the acquisition market. But then too, the operating of facilities was down. And that just made it like people weren't obviously excited. It wasn't performing as well as it had been. And that was felt and that was known. And we felt that. I mean, our investments and the last 2 years was some of the lowest performing in the last 20 that we've had, right? Kind of along with the Great Recession. Now, during this last 2 years, that's another thing that the people that were excited 3 years ago weren't there 3-4 years ago. And I think what it showed too is these times are massive transfers of wealth. Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class when dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process. They are bar none the best. So if you are looking to automate your facility or operate it in a best in class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description. So you transfer wealth from different groups of people that were on the up cycle and the start of that up cycle. And then right when it went down, a lot of those people are gone. They're not here anymore. They didn't stick it out. They're moving on to other things. Mm-hmm. The people that stuck it out, like a lot of storage people and operators that are gone through the cycles and everything, they're always there. They're ready to take advantage. They know what they're doing. But then you have a new group that's like, hey, we are going to move forward. Then these challenging times aren't a signal to run, but actually a signal to go. And that is where you see the wealth transfer. You have people that bought facilities over the last 4 or 5 years, and they'll sell it to the new people coming in, and they're going to get the upside of this new cycle. And we're seeing this in our deals and acquisitions. We have under contract, we're closing on a deal that I've talked about. I showed the case study. I've talked about it on this podcast, but I showed the case study of it at, whatever it was, $39 a square foot, and how this is in a city of millions of people. That same city, we bought a deal 6 months prior at $60 a square foot, and that was a steal. Mm-hmm. Like we stabilized that in 4 or 5 months. It increased the value dramatically on it. This is a market that everything was $100+ a square foot 2 years ago, right? And we're getting deals like that. That is a dramatic shift.
It's incredible.
And the upside of something like that I'm like, I can buy this at 39. And just through operations, I can make this thing worth 60. Mm-hmm. That's not saying the market's going to go up. That's not saying interest rates are going to go down and there's going to be lots of buyers. That wealth creation is life-changing.
It is. And those opportunities, like you said, those were non-existent for the last couple of years. We haven't seen anything like that.
Nothing like that. And so first is we're not seeing tons of deals. And a lot of people are like, oh, I'm not finding a lot of deals. So the market hasn't shifted or whatnot. And I have to remind them what you saw 3 years ago when you saw lots of deals. Those were sellers that were selling because of ridiculous prices. Today, sellers are selling because they're real sellers, right? So the quantity of deals coming out aren't as much as historically when people would pay crazy prices, but they're real. The last 2 years, we saw none. It was like nobody was, there was lots of people selling, but they weren't real sellers. They were still asking for $150. So deals weren't closing. Listings were coming out, but deals weren't closing. Portfolios weren't trading. And we've seen that gap from buyers and sellers really close. And now we have motivated sellers. And 2, capital has come back. Investors' interest has spiked. And a lot of this is largely due to the Fed because we have an economic policy change. The cycle of lifting interest rates, shutting down the economy to slow down inflation, that has now had its effect and starting to catch up, and the Fed has announced they're reversing course. That is the key here, because these cycles don't happen overnight. Mm-hmm. So the change in one, we had 3 years. Now we've changed, right? And it will take another 2 years for that to go in and the interest rates to go back down and normalize. This shift is when buyers and people with money and savvy investors go, it's time. Because we still have depressed prices and you still have maybe revenue that's lower, occupancy that's lower. So you're still getting a deal, but yet you already can see the roadmap moving forward for the next 3 years. Instead of thinking things are just going to go down, we now have the signal that, nope, it's going to change. Mm-hmm. And that's why it's exciting. And that's why we've seen a huge resurgence in investors. The last 30 days, the amount of capital that we've been raising has been wild. Now we're totally on the other problem where deals. We got to supply deals. Yep. The brokers we were talking to, they're getting listings all the time now. And they're saying sellers are being reasonable. So this is a big change. And this comes after the busy season that was another big change where last year in 2023, the busy season was down. It basically didn't come. We didn't have that busy season across our industry. It was actually lower. And so you had what was effectively 2 years of a slow season because the busy season never came to make up for it. And 2, that started out with a huge drop. This summer, we didn't see a ginormous resurgence, right? But we saw occupancy rise and rates began to rise. That we hadn't seen for 2 years. So you have the operations, now you have the market and the economy signaling the change. And that's why the time is now. And you have to remember, by the time that everything goes back to normal, if you wait too long, those deals don't exist anymore because everybody goes, yep, it's good. I think that it's going to be prolonged because of the elections.
Yep.
So people are going to be like, oh, they're weirded out because the elections are going to sit on the sideline. And then during the spring, I think it'll start to rush back. The problem is once that happens, prices normalize and you don't get deals. You're paying those high prices because now everybody knows and expects that to be there. And it's this balancing act that you have to play. You obviously don't want to buy something and you don't want to invest when things are going down, right? But at the same time, if you're buying and investing when they're going up, you're paying premiums for the future value, or why would the person sell it?
Right. Now you're doing the thing that everybody else is now doing.
Exactly.
Where, again, like what you just said, now is the perfect time. Get in before everybody starts doing the thing. The whole zigging and zagging situation, right? Everybody's zigging. We need to zag right now.
Yeah, the deals that we think we will be purchasing in the next 6 months, including the ones under contract that we're buying now, I think will be the best deals probably in the 10-year period of time that we will buy. They're already a fraction of the cost. We've got our one deal, brand spanking new at below replacement cost. This is in a market that was trading previously at $150 a square foot plus. So we're already buying those deals and we're seeing more of them. And it's a inefficient market to the tune of the interest rates being so high. It's changed the investors up and the buyers and sellers have met. That's good. That's what you want, right? But sellers do have to sell. So a lot of people think that sellers are selling because they can get a high price. That's not true. A normal marketplace, there's always sellers that have to sell for all sorts of reasons.
For sure.
Lots and lots of reasons. Some of them are literally selling because they just don't want to do it anymore. That's the one that we have under contract. They're like, I just want it gone. Like, you know, I don't want to do this. I don't do this. I bought this. I live in another state. I'm not even managing it. I just want the headache gone.
It's not as passive as I thought it was.
Exactly. Like, well. And so there's lots of sellers. I'm retiring. There's death. There's divorce. There's all sorts of reasons to sell other than I just want a super high price. And those are real sellers. And those are the ones that you want. And those, if you have to sell, you have to meet the market. So we're seeing those sellers start to be reasonable and come down to meet the market, which people were really holding off over the last 2 years. And they wanted premiums that had been in the past that just aren't coming back. And that is the big shift. And it's exciting. It's really exciting for me. I'm like, oh man, first of all, it's exciting to know that we're on the upswing because the last 2 years were hard. They were really hard.
From every angle.
Every angle.
Capital raising to acquisitions to, like you said, operations, everything. Having that 2 years of a slow season, not only like from an operational standpoint, but also having that from, you know, that private equity standpoint of slow capital, slow deals, everything else. It was kind of a rough couple years.
Couple years.
But I think,
and that's too under the fact that we didn't have floating interest rates. We didn't have deals we were losing. Right.
Yep.
It was just we weren't making as much money as we wanted to, expected to. Exactly. We had deals that weren't performing how we wanted. We couldn't buy new deals. We couldn't, that. We're not, this is, a lot of groups, they weren't in that position. A lot of people were losing deals.
I was going to say, I really want to make sure that we touch on that too, where it's like, it was rough in the fact that it, like you said, didn't perform in the way that we wanted it to. It wasn't rough that we were like liquidating assets and laying people off and going like there was none of that. It was,
and there was people that actually went through that.
Oh man.
And that sucks, right? That's really, really hard. And when you go through that too, lots of times it makes it hard to get that momentum going back again.
Oh, for sure.
So you have a lot of people, and for the people that are in that situation that are listening to the podcast, I want to make sure this is very clear because it even happens to us. During these times, this can kill your confidence because you get beaten up and you go, maybe I don't have what it takes, or maybe I was wrong on this and maybe I shouldn't be doing this. And this is a very natural thing, of course, because your plans didn't work out and you're failing, right? Or you're perceived even failing. And I know this can be really hard, especially when people have banks, they have investors, there's all sorts of things going on. They've let people down or they feel that they have. So first thing that I want to state here is for all of those people, I'm talking directly to you guys. You don't control the markets. Okay? You don't. You don't have a crystal ball. And market participants are market participants. We are taking risk. Investors are taking risks. Banks are taking risks. The idea that you were expected to know that interest rates would go up to something we've never seen in our lifetime, and that occupancy would drop and rates would drop something that never seen in storage. You couldn't have known that, right? Now, there's ways that you should learn from these experiences and say, I could have maybe better protected myself. That's what you want to do. You want to take away those things. But the best way to gain your confidence is to get back on the horse. And it's to realize the failures and the mistakes that you made, where that leads into opportunity. Mm-hmm. So this should be a way for you to see either what went wrong in the marketplace, okay, or what you did wrong, and then where that leads to opportunity. And so I would encourage a lot of people that are now maybe hesitant or gun shy because they're feeling burned to use that and say, no, now I know a lot more. I am more educated. I have better experience. So I'm actually better off now to protect myself as well as see opportunities and hold on to that, because I know there's a lot of people out there. I know they're feeling that. I mean, I felt that way this year. I felt like my confidence was down because I'm like, man, it's just not performing how I wanted it to, right? And it's not going exactly how we go to plan. But I'm like, we didn't lose deals. We're not going to. We have all those things. We did a good job protecting ourselves, our investors. Yeah, we're not getting returns we wanted. Like, that happens. That's how the markets work.
Margin of stupidity built in, baby.
Exactly.
We're good to go.
And so it's like, hey, and we knew these things were coming. We'd been talking about these things. Yeah. And so the best thing to do, right, is to now use that and keep going to make yourself better, everything else. And so that's really exciting for me that we're in a change and that those conversations will be being had. I got this great deal, right? Those are a lot funner than talking about, I bought a deal 6 months ago and now interest rates doubled and all my profits, gone or whatever that may be.
Occupancy is not growing at all.
Exactly. Yeah. Like, so we're in a fun part of the cycle. Mm-hmm. A really fun part of the cycle. And it's just starting and it doesn't erupt. That's not how this works. It's a slow build. Okay. So next year we believe will be better, but we don't believe it's going to be astronomical. It's not going to rock star or anything else, which that's good. That's what you want, because if it did, you'd never be able to get deals done. You'd never be able to find the good deals. So we have this intermediate time as this market changes, but it has been set forth by the government, the Fed, clearing out this whole stupid thing with the politicians that at the end of the day, if you are waiting to invest to decide whether Kamala or Trump wins, I don't understand that. That makes no sense to me, because what you're saying is if the candidate I don't like wins, then I'm never going to invest. No, you still are going to, or you're just going to stop doing everything. Right?
You're just never going to do anything.
You're never going to do anything. No. So that is a horrible reason to not move forward. Okay. They do not have as much power as you think they do. The Fed, that may be different. So,
no, you're exactly right, man.
The Fed is way more important
For sure.
than whatever that is stuff going on. The moment that they signaled and that they were moving forward, everything, that's actually what set the clear path. The circus show, the noise, it's not that it's not important. Of course, our governance is important. There's huge issues. Yes, I get it. At the same time, though, these people are there for 4 years and they're gone. Mm-hmm. How many presidents? I've gone through, 4 presidents now? And guess what? I'm going to go through 9 more.
Did any one of them just dramatically change your life?
No. Yeah. The Fed, we may look at the Fed and say the Fed definitely did, right?
Yeah.
But so I don't want people to get lost in the noise. Mm-hmm. So then they don't actually see the deals in front of them and they miss them, because that's generally why deals are there. they're good deals, but everybody's missing them because there's so much noise or fear in the marketplace.
Yeah, focusing on the wrong things. Because again, on the good or the bad side of it, there's no one politician, no one person that's going to come and save you. Or
No, never going to happen.
It's like you said, it's going to be what it's going to be.
Yep.
And again, the time is now. Don't hesitate.
The time is
Don't
to be
wait.
greedy today.
Yeah,
because
don't
others
shoot
are
yourself
fearful.
in the foot because of somebody you don't like or agree with or whatever. Don't hold back your future and your opportunities
Yes.
and everything that you can and should be because of focusing on the wrong things.
They'll be gone in 4 years, everybody.
Yeah.
And I hear people, well, we may not have a country. Then it doesn't matter anyways.
Yeah, there's going to be bigger problems, man.
Exactly. Like if that's the case,
Yeah.
there's certain risks that I'm like, I just kind of take out, like a depression,
Yeah,
world
yeah.
war, things like that. Because if that happens, we're all screwed no matter what.
Right.
So there's nothing to plan on.
Exactly.
That is literally just the idea of I'm not going to do anything or I'm going
Yeah.
to do something.
Exactly.
Those are your two options. But I do believe the fact that even though we have bad things and in the short term, bad decisions and bad things are made, over the long term, it takes people time to learn, to wise up, and then we have to correct overactions. But in the long term, the history of the world has shown we get better, right? Even in the Depression, look at what happened after the Depression to the United States. So don't think about those things and this political stuff, everybody. Don't let the noise of the circus stop you from changing your life. And remember, look at what matters. So in all the noise, the signal and the noise, find the signals. I'm telling you the signals. We're seeing them. We're hearing them. The signals are here. Okay. The noise, let it go. Right.
And the best thing that you could do if you are very concerned or concerned even in the slightest about any of those things, the economy, politics, any of it, society, whatever it is, the best thing that you could possibly do to hedge against those kinds of risks is to be a market participant.
Take control.
Exactly right.
Don't
To
be
a
subject.
part of it. Exactly. Be a producer, not
Yes.
a consumer.
Absolutely.
That is how you start that positive movement forward. I mean, you look at the founders back in the day, right? They were buying property, running businesses, doing the things, giving themselves the resources and abilities to affect the change that they wanted and needed to see.
100%.
Do the same thing.
Do the same thing and move forward. So guys, really, we are, the economy is changing. These are undercurrents of larger changes. They seem small, Fed's dropping points, right? The signal, though, of how the economy is changing, lots of times, too, that means in the short term, there's pain. So this is important, okay? Just because there's a signal, and so once again, this doesn't work like some chart. These are signals that we look for in longer term trends. We're talking years, okay? Lots of times, that actually means that in the shorter term, there could be more pain. That's why they're changing it, right? That's actually the reason why the change is coming. So what you don't do is just invest and buy for the short term. But after the Great Recession, we were buying properties and everybody's like, property values are going to keep going down. And guess what? They did. And those were the best deals we ever did. We looked at it and said, it's true that price may go down, but the value that I'm getting, as in what it produces and the return that I'm getting, is great. So even if in the short term things change, the long term, this is a home run.
Man, that's a perfect example right there. I was going to ask you, some of your biggest takeaways from those times. You said it feels like deja vu again.
Yeah.
Your biggest takeaway is one of those, that difference between price and value, I think is a really important thing to
Really
understand.
important.
What are some other takeaways having gone through the recession the first time after 2008?
We
buying assets
bought,
to
but
now?
didn't expect the market to do something that we wanted it to do. As in, we bought it, we knew fundamentals, this cash flows, we're going to be able to pay, it's going to give us a return, and we're going to work on that spread, that money on the table that I talk about, on what we can do to change it, and eventually markets will recorrect. When that happens, we had no clue. And it was so severe, right? When I say it's reminiscent of 2008, by the way, everybody, I'm not saying this is 2008. 2008 was wow bad. It was so bad that we thought it may take 10 years to recover. Like we could buy these things and they may not do a whole lot. We may get our cash flow return, everything else, but we may not see increases of value in everything in 10 years. Well, a lot of people wouldn't have ever even done it then. But really for us, we're like, I just don't know what's going to happen in the market. Turns out that wasn't true at all. Okay. And the value creation was staggering beyond anything we could have thought or even imagined. And that's the point. We didn't know. We didn't. And we weren't trying to time it.
Right. Yeah.
We knew they were good deals, and we knew there was distress, and we knew the value was off because of other things. That's what we're seeing today. Values are being affected way more from external things like interest rates than the fundamentals of the business. That's how you know when there's a deal. You know when a deal is overpriced, when the price of the asset is so far above and rising faster than the fundamentals of the business. That's when you have an overpriced. So overpriced is a disconnect with the price and the production to the upside. Underpriced and on discount, right, or a good deal is the opposite, where the price is disconnected to the value and the performance of that asset on the downside. That's now what we're seeing deals of. They're not everywhere, by the way, everybody. I told you this before. They're not everywhere. In 2009, 10, 11, a lot of people thought, oh, there's just deals everywhere you can buy. That's also not true. There was very few real estate deals that we could buy because sellers literally couldn't sell. There would only be a few deals that we even had a shot at. But it's the quality, not quantity. We had to work harder during that time. Yeah, we did. We built systems to find it, right? That's what we teach. And so we built and refined systems to do those things so that we could find good deals and everything. But it doesn't take a lot to completely change everything. And these deals are like, you have a 10-year market. This is only 1 or 2 of the years in a 10-year cycle. And it'll depend on how much down you even come. Sometimes you don't even get it. Sometimes you have 15, 20 years where you don't really ever have a change in the prices. They just kind of go up. So the bull markets so outweigh, right, the bear markets. It's not even funny. And so you want to make sure you're taking advantage.
No, exactly right. And when you're looking at like you said, you've got to work hard. It's not like deals are just coming across the table all over the place.
Yep.
Really good information there. As far as people moving into these new different times, what do you think is going to set apart like the people who do it and don't, the winners, losers? What's going to really separate those guys?
There's a few things. First of all, people that are trying to time the market, they never get it right. Because by the time the market tells you it's time, it's already too late. So they understand the short term may not be good. What they do though, is they focus very much on their buy box. They know what they want. They're trying to find good deals, good value, but they're also not trying to find home runs. And the reason being is you don't know the home run is a home run until after it's changed. So out of the deals that we bought, and this is over 20 years, a lot of the ones that we thought were going to be these super home runs, they weren't. They were great deals. And some of the ones that we just thought were great deals ended up being super home runs. And that's the point, right? Because I can't know what the market will do. So we have our buy box. We look for that value and that money on the table. So short term, what we can control. And then I'm buying when it's good. And then the long term, we let the markets take care of themselves. So people that work really hard on defining their buy box, getting out there networking, learning how to find value, right? And then doing the work, they're the ones that are going to find these diamonds. And they're the ones that are going to, get those deals that completely change. Because I want every deal that I do to be great. Every deal. But I don't know which ones will be home runs. But I can say, this is a great deal, right? That's the difference.
Yeah. No,
and you gotta work, you gotta network, you gotta learn. You gotta understand your buy box and your buying criteria. And when it meets it, you execute.
Yeah, no, I love that. And talking buy box, there was one thing we were talking about just prior to the podcast here is deals aren't the same like they were back after the recession when you guys first started. Deals, the way that facilities operate, the competition that's out there, everything has changed over the past even 5 years alone. It's been amazing, the difference. We talked a little bit about this idea of having your buy box and not just finding deals that fit within it, but going out and making deals to fit with it.
So we don't find deals, we make them. That is a really important point. Thank you for bringing that up and clarifying this too, because we don't find deals. Like people are like, oh, AJ, well, if I was you, I'd have people giving me deals. That's not how it works.
Yeah, no.
I wish it was. That'd be amazing. I wish sellers, if you just want to give us a deal that is fully occupied, rents are raising, there's no CapEx, and you want to give it to me at a 10 cap, that would be amazing.
Yeah, we'll take it.
I'll take it. I appreciate it. That's not how the market works though. So there's all of these different aspects that create value, and generally one of them's off. Hence the reason you're getting discounts, right? You don't have, we bought a lot of deals that were like the cash flow to start out is very little because that's why it's so discounted, right?
Mm-hmm. If any.
Exactly. But the opportunity and the upside, what it should be doing was huge on things that we could control, not the market, not things rising. But always there's an issue. Sometimes it's the seller and we have to work for 6 months with the seller to get it done. Sometimes we have to do seller financing because it wouldn't work on a straight line acquisition. Other times it's expansions. Sometimes we're huge delinquencies and we got to clean it up and it's falling apart. We got to move gates. There's always something. Other times, guys, it's just interest rates are really high. So financing is problematic. And now we got to adjust things with the financing, right? There's always generally something. So what we're doing is we're finding the core value props and we're making a deal out of that. We may have to adjust the way we structure financing. We may have to adjust our business plan. We may have to adjust how much it takes. We may have to put more capital expenditures into a turnaround. We may have to adjust our returns. So the first 2 years, we're not making nearly as much just because we know we got to turn this thing around. There's all of these things that we may have to adjust to create a great deal. But a good deal is never sent to you in your email box with an owner saying, I'm going to seller finance this at a 10 cap. It's in Southern California and I just built it. It doesn't happen. Mm-hmm. It only looks that way afterwards.
Yeah, no, it really does, man. It really looks like from the outside, especially if you're just getting started, that, oh yeah, you just go and you do this thing, you do that thing, and you do X, Y, and Z. And like it's some straight linear process.
It's not like that.
And it is not like that at all.
I'm going to wait till things make sense. So I'm going to get a deal, right? After 2010, people were right. Values were going to drop. They wasn't done. Well, you're right. There are problems. That's why I'm getting a deal.
Mm-hmm. Exactly.
That's the whole point, right? And so I do think that there's a misconception that, first of all, finding a deal means you have to do what others won't. You have to see what others don't. And you have to do things different besides getting it sent to you in an email box and just getting a great investor and a bank hands you money and you do the deal and you're set for life. Mm-hmm. It's not how it works. It's not simple like that. And it doesn't necessarily even mean that it's hard, okay? But you do need to understand the fundamentals, the value, and you need to get out and talk to people and you need to put in the work. Mm-hmm. So it may not be complicated, but you do need to put forth that effort to create the deal. And that's always going to be true.
No, it's so true. There's going to be work involved. That's why I'm like just so adamant that I attack the word passive anytime I hear it in any way, shape, and form. Yeah. So with that said, I mean, self-storage income inner circle is a fantastic place to do all of those things.
Yeah.
And I didn't even realize how many calls that we're doing with the inner circle, 2 a week. Where we jump on,
it's crazy,
going over deals,
attorneys,
talking about all of this,
everything, underwriting show. Because once again, it's this idea that, and I tell people this all the time, you're getting opportunities, you just don't see them. Mm-hmm. That's the problem. You get them, you just don't see them. And people that are doing it and know they can see the opportunities and deals you can't because they know. And so when I got started, the amount of rock star deals that we passed up, oh my gosh, it has to be like infinite. I can't even imagine how many deals that I passed up that were amazing deals.
You want to quickly share the one that you passed up buying for $1 million?
Oh yeah,
and you paid a bunch more for it. And what changed in that time frame that made you realize the true value?
True value. So we had a deal that was for $1.3 million. It was in one of our markets, but it was kind of run down. There's parking, everything else, and we wouldn't buy it because we're like, this is worth $800,000-900,000, and it was worth $1.3 million. A year later, we came back and I bought it for $2.5 million. And nothing had changed. So I paid $1 million more for a deal that a year previous I thought was worth $800,000. When I bought it for $2.5 million, that deal was worth $10 million to me. Mm-hmm. So think about that. The two different people that looked at that deal, because I saw two different things.
Yeah.
And when we looked at it, I saw much more of, first of all, expansion opportunities, yes, but we saw rent and market rates, and we saw just a dislocation of the value that wasn't incongruent with the rest of the market, which we just didn't pick up at the time. Mm. And I wanted the seller to do something I wanted him to do. Because I said, right now, it's only worth $800,000. And so you should just do it. Sell it. If I had that opportunity, I would have missed a ton of amazing deals. And that deal's a rock star.
It is.
Right? And
that's a good one.
Once we bought it, we saw that it was.
Yeah.
It was like, holy cow.
And continues to be so to this day.
Yeah. And before we did expansions or anything, we doubled the income on it, like immediately.
That's awesome.
Like it was, we didn't even need to expand it, and it was a home run.
Yeah.
So it was worth $5 million without even expanding it.
Man.
Now, once again, though, the difference was we knew what we were looking for. And that was the whole point with the, self-storage income. And then our groups, it was like, okay, I want to show people more and understand it. And so at my time. And so the inner circle, things like that, that's it. It's like, here are the opportunities. Here's what we see. That's why we bring deals to them. That's why we do deals. But it's to make sure that they know where to look and then how to execute on it.
Exactly right. So check the inner circle out, guys.
Yeah. Dude, this is awesome.
Yeah,
I'm so excited. This is going to be, the end of the year. We're still getting out of all this stuff. Next year, it's going to get better and better and better. And we're so excited to tell you guys about all the deals we're finding, how we're making them, and what we're doing on the execution side. We've got, a lot of money, and we are ready to buy and deploy. So we're excited you guys are along this journey with us, and look forward to telling you all about it.
Absolutely. And we look forward to hearing you tell us about all the storage facilities you're out there acquiring and changing your lives. That said, thanks, guys.
Thanks.
See you next time.